Good morning. Good morning. So, welcome to the second in the NPF webinar series. It's called Financial Innovation, Crisis Management. Thank you again today. We've had such an incredible response, and I think we've improved attendance webinar by over 30%. So thank you so much for everybody's support. Just a quick thank you to all our speakers for their contributions, our partners, our media partners for promoting the event, and of course to our QUBE team who have been phenomenal in getting everything together. Marty for the ahead, Luca, everyone for their contributions. We've tried to make this webinar a bit more interactive. So you will see that the agenda consists mostly of panel discussions. We encourage all of you to please jump in, ask your questions. We'll be having a number of polls as well. And these are encouraged so we can get your feedback and make sure that we keep it as interesting as possible. It's also really important for us to have your feedback, and we encourage all of you to give us, your input with regards to what we've done right, what we've done wrong, and how we can improve on the model. We obviously want to keep people as connected as possible. We have also created an attendee list, which we'll be sharing. We're really happy to do any introductions and, again, keep people connected. So thanks for that, and please do message us. We're all online if you need anything, if you have any technical issues, we're happy to support you. I would like to introduce you to our forum chairman, Nick Kurjan and Robert Courtney. Thank you so much for assisting us with chairing of this event. We really, really appreciate that. Marta, who's with QUBE, who's put together the content, she's done a phenomenal job. Thank you so much. She'll be on the stage and also supporting, making sure that all the speakers get on and off in time. So thank you. Let's get started. Have a good webinar. I'll see you at the end for all your feedback. Thank you so much.
Thank you, Lily.
Many thanks, Lily, and very warm welcome and good morning to everyone on this webinar. We've had a fantastic sign up. There's over 90 people signed up for this webinar, so I'm really looking forward to it. And we've got a fantastic lineup of speakers and panel discussions today. Innovation might seem, a slightly strange topic to be talking about in a crisis, but actually innovation is vitally important in a crisis scenario. And we know that actually many of the greatest innovations in history have come from adversity. So the first computing, mass use of antibiotics, and the use of radar all came from the Second World War, for example. So actually this is a really important topic to be starting with today, and it's my great pleasure to be co-chairing with Robert. Robert, I've not got much sun here in Oxford. It seems to have reverted to typical English weather here with rain and drizzle. I don't know what it's like with you in London.
Well, we had some sun this morning, but the clouds have come in now, but we're still much better than we would expect this time of year. Yes, thanks very much for the intro there. Nick and I are going to be going through today's agenda. We're taking half the agenda each. I'm doing the first half up to the coffee break, and then after the coffee break, Nick will follow. As Lily said at the beginning, Marta's pulled together some great speakers today, so we've got some great content. I'm kicking off with a Nordic view of banking innovation with Alexi from Finland, we've got Christian from Danske Bank, and then we've got Kristen from DNB in Norway with some very interesting views on what banking is doing in this time of crisis. And then we've got a more eclectic panel that is looking at opportunities and challenges in the current situation. Got a good friend of mine, Kevin Mountford, that's got a startup starting in the middle of this lockdown called Raisin, and then I've got my old friend Diedrich from ESBG and EPC, who will always give us some great content on what's going on a sort of a retailers as well as the EPC views. I've got Anna, a co-contributor to the Paytech book in that group, and as well as Pedro giving us a look at what the insurance sector is doing from NN Insurance. And finally, but certainly not least, I've got Paul from EconPay. So that's going to be a really interesting panel looking at what opportunities and challenges come out of this crisis. And then finally, I've got Kevin, but he's going to be joined with Kristen's colleague Maria from DNB to look at what's going on in the investment and startup community and how they're coping in this very interesting phase that we're going through, this social experiment. So that's the morning lineup, the first three sets. Nick, do you want to say what we're doing after the coffee break?
Yeah, so after those sessions, we've got a virtual coffee break, but please stay online and engaged, because we've got a set of polls for you all to give us your feedback and responses on, and some thought-provoking questions in those polls. We then go into a keynote session with Massimo. Massimo's going to be speaking about innovative blockchain solutions and how those are being used to monitor and reduce the spread of coronavirus. So I'm really looking forward to that session from Massimo. And from that, we go into two panels. The first panel is about marketing, innovation, and digital banking. We're going to hear from Amit, Alexei, Christian, again, Marius, and Rene. So we've got a really diverse set on those panels, and we're going to be talking about how customer expectations will change, and brand loyalty may change as well. And then the final panel of the morning is about business model innovation. So we'll have Pedro, Amit, and Harry as part of that session. And we'll be talking about how we think business models are evolving in the crisis and likely to evolve post-crisis, particularly with reference to digital transformation. And then at the end, Robert and I will wrap up and give some closing thoughts. So without further ado, I'm conscious of time, Robert, so shall we get going into the first
Definitely,
session?
okay, we're a few minutes out, but that's great. So just to introduce my first panel, I've got Alexei. Do you want to just say a couple of words? We'll just do this one at a time quick.
Yeah, sure. I hope my mic is on and everybody can hear me.
Yep.
Alexei, head of digitalization at the Bank of Finland, which is the central bank of Finland. So I'm not directly involved in, fintech companies, but rather looking at the payment systems and fintech development from a sort of higher level.
Christian, do you want to kick in and just say what you're doing, or should we go? Yeah, Christian, are you there? No, we're going Kirsten. Sorry, it's going to be very Christian and Christian.
Yes. My name is Kristin Riese and I work for DNB. I head up innovation management and practice, responsible for making the strategy and plan how we innovate in DNB. And it's important today. Yes, definitely.
And finally, but certainly not least, but it's going to get muddled up, Christian. Please, from Danske.
Thanks. My name is Christian Lucas. I work at Danske Bank on the P27 program, which is the Neo Nordic infrastructure. And essentially, my role is to look at opportunities to innovate on top of that new infrastructure, particularly for corporate customers.
Brilliant, thank you. So kicking off, maybe Christine from DNB. We had a really interesting chat about some of the stuff that DNB is getting involved in during this crisis. Perhaps you could enlighten the listeners about what's going on.
Yes, I mean, as you're all aware, the coronavirus is severely affecting the economy as well as the health. So in Norway, the government, as they've done elsewhere, launched a rescue package for businesses who in particular have lost a lot of their potential for income because they've been closed down. So 2 weeks before Easter, so late March, the CEO of DNB got a call that we're launching this rescue package, but we don't know how we're going to get to pay all these companies. Lots of billions available, but how are we going to get this paid out? So DNB and BIX, which is the financial association infrastructure company in Norway, and the tax department actually got to get together, and in 3 weeks we have built a brand new platform where corporations can apply for support package. They're identified, it's automatically integrated with their annual report, which is drawn down, and an application is sent. And they will then get approval or a no-go for getting support. And we actually built this brand new portal in 3 weeks, online on Teams, working on Teams, passing all red tape. And on Friday, the 17th of April, it was approved by the ESA. And on Monday, the 20th of April, we launched it and we paid out our first sums. So after a week, there's been hardly any errors in the system. It's a 90% automation that actually go through without any problems. And 60% of the companies that have applied have actually been paid out money in support. And this is a big program. It's 20 billion kroner a month is what's available for payments. So it's been an amazing success story of how the authorities, the tax department, and private banks, as well as the association, have collaborated in actually making something. And it sort of shows what you can do when you have to, and you don't have to sit in lots of meetings with red tape, but you actually get decisions straight away. So it's been a great showcase to see what we can do when we pull together.
And your guys were working around the clock on that one through Easter, I believe.
They worked around the clock every day, all night, so they're sleeping now.
But it just shows what can be done when everyone pulls together for the common cause. Alexi, what have you been seeing going on in Finland? Has much been happening in relation to sort of the government stepping in and the banks helping?
Yeah, I think the story is very much similar. So it starts with a political decision to provide support, both in terms of tax relief, but also direct subsidies to companies. And I think what we're seeing here is that we in Finland have tried to leverage whatever systems and structures we already have in place as a way to quickly implement some of these measures. So using agencies that have already had good processes for reaching out to businesses and companies. And it has its pros and cons, and the pros are definitely that you can quickly get the funding needed to the businesses, and we've used, for example, our sort of innovation agency to reach out to growth companies, but then also some of the regional agencies to smaller businesses. The sort of downside of that is that they're not really built for this purpose specifically. So there have been some gaps in reaching certain types of businesses, and while at the same time these existing systems have been used, then we've also have seen some development of new ways of reaching businesses, such as the service sector is maybe somewhat underserved by some of these support mechanisms. So now, the government is ramping up ways to reach those businesses as well.
And in the UK, we had a lowering of interest rates by the central bank. Have you done anything similar in Finland, or?
So the monetary policy measures are done in Frankfurt for the whole euro system. In addition to that, the Bank of Finland has some ways to directly support the local businesses as well, apart from the monetary policy regime. So, for example, we've seen a sort of resurgence of the commercial paper market, and some direct funding also through the commercial paper markets to larger companies through the central bank.
Okay, that's great. So I was chatting to Christian yesterday, and you were saying some sort of changes in the way in which businesses are looking at the sort of the fintechs against the big banks. Do you want to elaborate a bit?
Yeah, and if I can just comment on what they're doing in Norway specifically. Cool. I think the idea in Denmark was the same, but the way it's been executed is very different. So the Danish government has come up with similar type of packages, but it's all based on applying for these packages. Doesn't really have anything to do with the banks, apart from the banks are guaranteed a certain amount of the payments they're giving to the companies as a bridging while they're waiting for their payment from the government. The problem is there's been a bit of finger pointing in this, because as a bank, you look at data, you look at your history with the client to see, what is your risk in giving them a loan, and even a bridging loan that's backed by the government. Well, if you make a wrong assessment of a company, the government might actually not pay you that money. So there's really a little bit of a disjoint, and I do really hats off to Norway for coming together and actually doing it together, instead of sitting in two different camps and pointing finger a little bit at the banks and going, well, just pay out the money. And we go, well, we still have a due diligence here, and obviously we're doing the very best we can and as quickly as we can. But some companies just don't have the information available to even assess whether they're actually eligible for these packages. And when you have this disjoint, that then comes down to the banks looking, a little bit like the bad guy for not giving out the money that the government has promised will be there. So yeah, would have been nice to see a bit more innovation like in Norway. But what it does go back to is we need a better way of getting to know our customers a lot better, a lot quicker. Today, we just don't have the amount of data needed to really know what our customers are doing, unless we have a relationship with them where they're already giving us that data. And because there's so many different ERP systems and economy systems out there, we don't have the ability to interact with all of them, which means it becomes a very manual process to actually go through the data. So if they don't have their up-to-date financials, well, we manually have to go through their records and see, what the business looks like.
Can I comment on that, Robert?
Yeah.
Just to clarify a few things, and it's a very good point made by Christian, because the solution I mentioned it's actually owned by the tax authorities. So the banks do no assessment in this solution. We only are the paying out bank. So we've had our payment experts and our computer experts and our front-end developers who've helped make the solution in cooperation with the tax authorities, but the bank is not involved other than the institution that pays out the money. As in contrast to the government guaranteed company applies for a loan in its bank, and it can be guaranteed by the state, but yes, you have to do your assessments, because you really have to look at would this company have survived anyway. So for some companies today are like, should I apply for the state-backed loan with my bank, or should I apply for this free money from the state? And how they've actually chosen to do this with the tax authority and the applications there is that they will have to go back and prove that they had lost 30% of their income, and there's going to be auditors who have to sign off on it in the back end next year. So they're getting their money now, and then they have to prove later that they did the right thing. It's very different than going to a bank and having all the numbers up front and getting the assessment done, etc. This is a very different solution, that the giving away the money. It's different criteria and not banks assessing the viability.
Well, at least that speeds up the process. Kristen, I did have a question for you that's come in from Demea, and she's saying, how did you manage to get legal documents signed by customers? Did you do it remotely, or did you take other COVID social distancing related measures?
All online. This is all online. There's no physical involvement whatsoever. It's all your ID, your bank ID solution that we use in Norway to identify who you are and that you can do these things. It's your numbers are automatically uploaded from the tax system. Mm-hmm. So it's no physical involvement whatsoever. It takes about 30 minutes to complete, between 15 and 30 minutes to complete the application in the system. And the next 90% goes through automatically. Right.
Well, that's great. Well, hopefully that answered Demea's question. Just going back to you, Christian, we were going to, I raised the other question that we were talking about, was a change in the way some businesses were looking at the bigger banks. Do you want to just update?
Yeah, I think it's no secret that the Danish banks have had a bit of a reputation the last couple of years. You know, a lot of, especially small businesses and personal customers, have found other banks that they've found, you know, have a better approach to them. It's definitely something that's been worked on a lot, and you know, we have managed to turn around the trend last year. But what we've seen now is that for very large corporations who typically have us or one of the other major Nordic banks as their primary bank, but also have funding from European or American banks, they're really seeing contraction in that funding, which means they become closer to us. Suddenly they realize that we're still here. You know, we're still there for them. Whereas a bank in the US that's funding a Danish company starts looking at, is that really a risk I want to take when it's so far away from my main market? And for
there's been sort of a coming back of businesses because they feel comfortable that they've got their local Danish banks that they can work with, that trust them.
Exactly. I think for the big companies, some of it is basically just down to lack of options. They don't have the options they had, you know, 6 months ago. I think for one tier down in our customers in terms of size, they are now coming back to us from the smaller banks, from the FinTechs, because they need solutions. And as a bank, we have a lot of products. We might not be the best at all the products, but we have all of the products, which means it's much easier for them to come to us and you know, repackage their solution. So that's why we're seeing a trend where some of the customers that previously had kind of, from our point of view, drifted towards the FinTechs and the smaller banks, they are now coming back to us for solutions.
And do you think it might also be a trust thing in times of crisis? People tend to go back to old trusted ways, and they're less into sort of some of the newer startups, as it were.
Yeah, definitely. I think you know, it's just human nature. When something like this goes on, you look at where do I have the least risk, where do I have the least concern, and where do I not have to think so much about it. And you know, for better or worse, the big banks, you know, they have the solutions. They're going to be around. They might not be your favorite bank. They might not be the best at a particular service that you value the most, but you know they're going to be here tomorrow. And I think, you know, sometimes that's a bit heightened in situations like this, and maybe a little bit out of proportion sometimes. But I think that is the way customers are looking at the moment.
And Alexi, in Finland, are you seeing anything similar happening in the industry? Are you seeing any changes in banking behavior or anything?
I think it looks very much the same. So I think, you know, trust is something that you build over time, and you know, banks built their reputation over the years. Same thing with some of the new entrants and fintechs. And now, when there's a crisis, this is the time to actually then put that trust to the test. And I think what we're seeing is, people are trusting the the established incumbents quite a lot at this point. At the same time, this is a time when winners and losers get selected out of some of the new entrants. So there are clearly some fintechs which have had enough time to build a reputation and build some trust and strong relationships with their own customers, and some of those will do very well, while others unfortunately will be driven out of the market. But definitely, I think what we're seeing also from the if we look at institutions like the central bank and cash, early in the crisis we saw some panic behavior, maybe people were withdrawing a lot of cash and going back to cash in terms of payment instruments. Now, as the crisis has evolved, digital payments are definitely growing much faster, and people are again going towards the trend of using less cash. But there was clearly a sort of peak early in the crisis when people went back to the one thing that they could trust, and that was cash payments. And I think it's the same dynamic with the fintech versus incumbents.
Well, the other thing we have seen generally, I think, is a reduction in ATM withdrawals. People do now have a different view of cash. They do see it as a transmitter of the virus because of the physical nature of holding cash. People even don't like touching the buttons on the ATM machine, let alone the POS machines in shops. We are seeing this sort of push towards contactless, and in the UK we've increased contactless to £45. Have you seen similar things across the Nordics?
Yeah, I think we so the trust, once you trust the banks and the cash isn't going to disappear, then we saw a huge change in the uptake of the tapping. We increased the limit as well, so you didn't have to push your code. So I think a lot of the shops actually put up, we don't want, don't use cash, use only card, and you can tap here. So I think this is a big shift in changing people's behavior. Once they do this and they see that it works, we barely use cash in Norway at all. So I haven't seen it in a few years.
And it's interesting, we've got 3 of the Nordic countries here, but we haven't got Sweden, who've gone for the different approach to this virus. Have any of you got any insights of what might be going on in Sweden in the banking world? Because they didn't close down anything, did they, particularly? They left everything open. So presumably it's pretty much business as usual there, is it?
They still work from home. They have put in some of the measures, but not closed the schools for the young people and stuff. But they've definitely, put in anyone who can work from home is working from home. They just haven't been as drastic as a lot of the other countries with lockdowns, etc.
But has it changed the banking mentality as well? Is it? I mean, the whole thing with the Nordics is you're pretty cashless anyway, so you're not. It's not like you were the most cash-using societies. You weren't like the sort of south of Europe. I mean, I think most of the Nordics were already down in the sort of single-digit cash usage in many parts. Do you see this as actually changing anything on that, or do you think the Nordics are just going to stay steady, or do you think it has actually even reduced more the cash usage?
It has definitely reduced it even more. I mean, early in the crisis, as I mentioned, there was a bit of sort of panic behavior, but now I think the crisis has accelerated the trend towards cashless. We're clearly seeing that in the amounts of withdrawals, and also the uptake of all the contactless services and card payments, online payments. People are ordering more online.
Yes.
They're using home delivery services. Some of the fintechs that are running those infrastructures and those services have seen the business and the operations increase many-fold. So I think this is definitely accelerating the trend that we had already seen before. Okay,
well, we are up on our time, but we did start a few minutes late, so we'd just have one last comment from each of you. So perhaps start with Christian. any thoughts on how the banks are going to come out at the end of this crisis?
I think the incumbent banks are going to come out of it fine. There's the solidity there. I think some of the smaller banks could struggle. I think it just comes down to your customer base and what you're earning your money on as a bank.
Kristen?
Well, the last time we had a crisis, the financial crisis, the banks were the problem. This time, I definitely think they're a very important part of the solution in coming out of this crisis. And I think the government and a lot of the large clients, corporates, definitely understand that.
And as you say, the last crisis, they were the bottom of the rank afterwards. They really lost a lot of public trust. I think on this one, as you say, they can do the reverse. They can come out up the curve. And finally, Alexi, any final thoughts from you on how banks will be seen at the end of this?
No, I think Kristen put it exactly right. Last time the crisis was about the banks. This time the banks are clearly part of the solution. They've been building new capabilities the last 10 years, and now all of those new capabilities are being put to the test, and they've been holding up pretty well. I mean, we've seen all the new payment systems working really well, all the new services, how they've been used. So I think, the banks are going to come out really strong on this one.
So thank you all very much. Thank you, Alexi. Thank you, Kristen, and thank you, Christian. I think that was really useful. If any of the attendees do have any questions for any of them, please put them in the question section. They will be answered after the event or during it still. So please put your questions down. But just a big thank you to Kristen, Alexi, and Christian. Thank you very much. That's about the best we can do for clapping. And I'd like to invite onto the stage my next panelists, please. So if Paul, Kevin, Anna, Diederik, and Pedro could all come onto stage, please. This next session, as I said at the beginning, is opportunities and challenges that are coming out of it. And as I say, we have got a much more eclectic panel here. The last panel was all the banks and the central banks in the Nordic region. Here we've got parts of the insurance. We've got banking. We've got paytech, and we've got startup. So I think it's a really good group. So I will ask everyone to just quickly introduce themselves. So if we kick off with Paul, please. You want to just give a quick intro?
Good morning, everyone. Paul Marcantonio here, calling from London, and I am head of UK and Western Europe for eCompay.
Thank you. Anna?
Good morning, everyone. I'm a FinTech leader at PwC, and I'm just working together with corporate clients, banks and financial institutions, and FinTech startups.
Okay, Pedro?
Hello, Pedro here, a Brazilian landing in Hungary and working as a Chief Information Officer for NN, specifically after 6 years in the Czech market and now in Hungarian market. It's a pleasure to be here.
Thank you. Diederik, I can see you there.
Hi, good morning all. This is Diederik Brugging. I'm working for the ESBG, the European Savings and Retail Banking Group, which is an industry association of basically savings and retail banks, having membership basically banks all over Europe, and especially responsible for the innovation and payments related topics, defending the interest of those banks vis-a-vis the regulators here in Europe. Thank you.
And finally, but not least, of course, my old friend Kevin. How are you?
Yeah, hi. Morning, everybody. So I'm calling in today from northwest of England. So I'm the co-founder of Raisin UK. Raisin UK is a subsidiary of Raisin GmbH, which is a tech marketplace platform formed about 6 years ago, primarily to help savers make more of their cash savings. And to date has brokered in excess of 20 billion euros.
So I'm going to kick off with Pedro, if that's all right. Pedro,
Sure.
Just wanted, we were sort of looking at some of the stuff that was going on, like open banking and and stuff like the privacy and technological advances. How are you seeing sort of the whole part of what opportunities and what challenges are you seeing coming out in this lockdown era?
So one interesting part is how regulators play a role specifically on the insurance market, specifically in the Central Eastern European countries, where the regulator has such a tremendous power, having it here in Hungary, and with the lockdown that we have of our processes are, as you can imagine, being the underdogs of digitalization. As I always say, we are playing catch up. We're trying to play as banks with digital transformations, is that we're heavily paper-based, meaning that our processes are binded by legal clauses, as it was a question from, if I'm not mistaken, from Demira. So it was very interesting for me because they're exactly the point where our production can come to a halt. Yeah, and by coming to a halt means that our processes are physical. We cannot have distance signing, selling, specifically in Hungary. In Czech is a little bit different. I can explain it if it's interesting as well. But due to the fact that you have digital biometric vectorial-based signatures, it means that with your customer, you have to be side by side with a signing pad. That if you want to be a digital process, you have to sign it digitally on a pad, as you can imagine those DHL pads. And with this, you can imagine how much of a threat it was to have a lockdown and to not have social contact anymore. Where our agents, where Hungarian market is heavily based on tidiness networks, so meaning that we don't have brokerage, so brokers that sell to many partners, instead tied to a certain brand. And this we have to reshape and to relook at it on our own process as well. So meaning that the joke of COVID-19 being the accelerator of our digital transformation was more than accurate. So we're thinking those processes and how we could enable the agents to have distance selling. That's how we're trying to call it, because it's not a full digital, because we still have to have the need of a person talking to them and sharing the thoughts and explaining why is it important. You know, from an insurance perspective, insurances are sold, they're not bought. You don't usually wake up saying, what a good day to buy insurance. Yeah, and that's how we're trying to cope with.
And the regulators you're talking about, you're saying you think that they need to show greater flexibility at this point in time to help you.
Yeah, so we have to try to work it out, and they understand as well that to share and mitigate risk, so at least to share it and to divide this risk, be acting as reinsurance of the governor.
You've gone muted.
Well, we know about from a institution perspective, where if you don't flatten the curve, you can have a lot of problems with it. And if they don't share with insurers, if they are not lenient and flexible enough, they can get to a point where they incur all the risk without having the possibility to share it with the insurers. So they were a little bit more lenient, not to the point where those specifically, for example, digital signature, they're not fully yet. Cloud adoption is something very complex. It's something that we struggle with it. It's a compliance rules and packages that we have to deliver with exit strategies, with technologies that are being bound by it. So they're flexibilizing in terms of having a little bit of leeway for regulatory and compliance duties that the insurer has to do against the national bank, but not necessarily on their own process yet. But we can see that the conversations are being open for this. So we've been talking since the 13th of March, we started with this year in Hungary, and the conversations accelerated at speed lightning for providing a support, not only from a monetary perspective of having this whole banking, as it was discussed before, how the banks were supporting customers to get on their feet, but also from an insurance perspective, where the risk and protection cases could be supported from a regulator and insurer as more of a partnership, as I can see a symbiotic approach to them.
Yeah, no, that's really. I mean, it's interesting to see that the regulators are coming on board and helping out in these situations. And as we've seen in the past, these crises can act as an accelerator to help innovation and change. Kevin, I was chatting to you. I mean, I think you were talking about lessons learned from the previous crisis and how that has helped in the current crisis to that we're in a better place than we would have been had we not had the 2007 crisis. So maybe you want to expand on that a bit.
Yeah, I think on a number of levels. I recall, particularly in the business I was running at the time, we literally were like kind of rabbits in the headlights, and because the kind of core issue was related to financial services, it felt that pretty much everything was kind of stopping at their door. And the lessons learned, I certainly think, and I guess stress tests have proven that the banking sector per se is far more robust. I saw some reports in the UK as recent as December, where, as I say, they came out with, pretty much a kind of vote of confidence, but nobody anticipated, I guess, the kind of crisis we're facing now. But also, particularly again in the UK, there was an aim to improve competition, to try and break, I suppose, if you want to call it, the stranglehold of the big banks. And we've seen something like 20 new banks introduced to the UK over the last 10 years. And they're very different business models. Often they're more agile, they're tech-based, but everybody's fishing in the same pond. So they're all after kind of retail deposits to maintain the liquidity position. So I think that the situation now, it does not appear to be severe from a business point of view, particularly in our sector. Obviously conscious on many other levels, it is. But I think the points from the earlier panel that fingers quickly pointed at the banking sector back in 2007. And I know there's still some criticisms, particularly in terms of speed of deploying loans, etc. But the banking sector per se, I agree, can be part of the solution. And I do think that those organisations that respond in the right way will be the ones that win through as we come out the other side.
Thank you. Talking about the way in things are working, Diederik, how are you seeing from a European-wide perspective how people are dealing with this, and what sort of opportunities are appearing?
Thank you, Robert. Indeed, if we look at what European banks faced, they basically faced an immediate change overnight, meaning that the banks were triggered to react quickly. First and foremost, of course, the health and safety of customers and staff were the priority. Of course, banks need to ensure that the services remain uninterrupted and the service levels remain as is. And to accommodate the lockdowns or confinements or whatever it's being called, customers need to be encouraged to use electronic channels wherever possible. But if you look at the starting points where most banks come from, and especially within our membership, it are more traditional savings and retail banks, which also rely on the personal relationship with the physical branches. So really there it is a boost for increasing the touch points, the electronic touch points, to move people to those new channels. Also, if you look what happened in Europe as abroad, it was also touched upon a bit in the first panel. But in the first few days of the confinement, we saw a severe increase in cash withdrawals. That was clearly a sign of people looking for safety and store as much cash basically as they could get hold of to make sure that if interruptions happened, at least they had some stack at home. And banks were able to manage this especially increased demands, which in some countries were reported up to 4 to 5 times higher than usual. But after that, we saw immediately a quick drop in cash withdrawals, and it's at the moment plateauing at about 50% of usual cash withdrawals. Indeed, partly driven by basically fake news that banknotes were spreading the virus, but basically also driven by the fact that people were encouraged to use their cards, and especially the contactless cards. So although we now see indeed a spike in the share of contactless transactions in all transactions, we also have to say that basically in general all card transactions are basically also showing a decrease to 25 to 30%, basically due to the fact that the economy as a whole is slowly getting to a small standstill. So basically what we see happening in short is this is really an eye-opener, force banks to innovate, leverage the innovative and electronic channels. It remains to be seen what customer behavior will be after this shock. Will they continue to use a contactless card and move away from cash? But bank needs to at least cater to make sure that that the bank's customers can use these electronic touch points. So I think the focus will be on increasing that. Which, by the way, at the moment, banks had some. The key priority is, of course, to remaining service levels as is. So all the focus of staff being there remotely or working in shifts is making sure that the payments and critical account systems are reaching the current service levels. The remote working has some impact on current innovation, but it will be certainly prioritized for the near future. So I think it's key that also the regulators understand that the bank's priority is at the moment keep the business going. So also to that end, the Banking Association has asked the regulators for some delay in either some deadlines for legislation or for consultations, which in most cases were accommodated, which we are very grateful for. So thanks for that, and back to you, Robert.
Thank you. That was really useful, Diederik. I'm going to go over to Anna now, FinTech leader at PwC. What trends have you noticed since the lockdown? When we're like 6 weeks in, have you seen any major changes that are happening? Are some of your players in the FinTech space changing their models, or?
Yeah, thank you, Robert. So basically, I would like to make 2 points here. So first is about digital transformation, and the second one is about the bank FinTech cooperation. So the first one about digital transformation. So definitely we might see some acceleration in this area. So there are like, just new projects coming in, especially in the area that was touched by Pedro. So like increase of sales through digital channels, and basically like, just looking for different sales models, but based on the digital channels. And for example, like digital onboarding, we see like, I really witness like more on that, even, opening bank account through selfie or, just using the selfie. This is not only on the challengers bank side, this is definitely happening on the incumbent side as well. Also like, just looking for new digital channels and how we can use them just to increase sales. This is happening on the FinTech side. So they're like, just models selling through webinars, for example, also using social media, including LinkedIn. And then, I would say that there will be like, just the acceleration. So we might observe more projects coming into digital transformation. But the second thing is the area of focus. So I would say there are like 2 main areas of focus. First is like revenue protection and customer retention. So everything related to data analytics, predictive analysis. So we are not talking about data-driven company right now, but analytically driven. And it can be applied not only to the banking or financial services sector, but also to other sectors. So definitely we will observe, like we'll witness like more projects coming into this area, data analytics as well. And new ways of predicting or forecasting customer behavior, but also related to credit policy or credit scoring, risk management, I would say. And definitely the cloud usage and the cloud computing. So this is what was happening on the FinTech side. So they are just running some POCs, proof of concepts tests, using the cloud remotely. But of course, this is subjected to regulations in the banking sector, but there are also some new projects in this area just coming from the incumbent side. So the cloud is also important. And coming back to the FinTech or bank FinTech collaboration area, and I think it was really just brilliantly made by Christine in the previous panel. So banks were the problem of the previous financial crisis. Now they can be part of the solution, as we already pointed out, but I would even go further or just make it stronger. So FinTechs that were the solution for the financial crisis in 2008, now they can be also part of the solution. So we will be talking about bank fintech cooperation and collaborations models, because banks really need some pain points to be addressed in an agile, very innovative way, and fintechs can be an answer for that.
That's great. So you're seeing this as somewhat of an accelerator in that bank fintech cooperation space, and you think there will be some good transformations coming out of this?
Yeah, definitely, because just what can fintech offer, what they can bring to the table, and what I see is like they have not only the new sales model, also new pricing models. So they are really open and ready to just to get some, just to offer some discounts, so discounted models or free of charge even for POCs, for tests. So they really just trying to transform the selling and the pricing proposition, which is of course very much helpful for the incumbents, for the banks. And and they also offer like innovative solutions to the problem. There's a good time to pivot as well for some of the companies, and they can, as said, fintechs can do that in a very nimble and agile way. So quicker and better than banks, and definitely this, just this mutual relation is very much needed in the banking and financial services world.
So last but not least in this panel, Paul, you were talking about sort of the investment in streamlining and innovation that's come around through this, which sort of flows on nicely from what Anna was saying there. Do you want to talk a bit more about what you've been seeing going on in the e-commerce space?
Yeah, sure. Thank you, Robert. So I would certainly agree that in these really challenging and troubling times, fintechs and access to payments can absolutely be part of the solution. And this is, this is our job. This is the job of a fintech. Normally, when you're speaking to new and existing customers, you are constantly at this battle of dragging them into the 21st century, where online payment facilitation has to be the most important thing. However, businesses have different priorities, and for some reason, for whatever reason internally, they may have a priority on face-to-face business or bricks and mortar business. However, the situation that we find ourselves in with the social distancing, as we all have been speaking about this in the previous panel before, is that now is massively restricted. So businesses, in order to survive, they're having to look at their resilience, and part of that resilience is looking at their existing performance metrics, looking at how they're doing things, what they need to do in order to evolve and adapt to this new society. And this is where businesses or fintechs with a heavily technology focus can assist with that. But I think it's really important to mention as well that it's not just about being able to provide the online service. It's about how you can deliver that as a service-based provider, how you can deliver that in the most quickly and efficient manner. And this is going through the whole due diligence process and going through the KYC. One thing was interesting to mention in the previous panel actually is that one great example of how we've sort of adapted as an organization is we rely, because we're FCA regulated, we're a principal member of Visa, MasterCard, we heavily rely on wet signatures, on compliance documentation. However, we pushed through the digital signature mentality, and this has really helped. It's helped us streamline things internally. It's helped us improve our efficiencies, but first and foremost, it's helped speed up the process for our merchants who want to get to an online commerce offering as quickly as possible. It's no good being able to provide something to get them online if it takes 6 months to get there, because in 6 months' time we'll be in a very different place. So we've looked at how we can provide support in terms of access to data, access to tools and resources, but also how we can bring a business online and accepting payments in as shortest time as possible, whilst maintaining the compliancy element, which is ever important, so that both sides are protected. So,
Paul, a question has come in that relates to that from Emmanuel, saying, how do you see facial recognition-based payments developing in Europe post-COVID? Do you think this is something that is going to accelerate?
Yeah, I think this is a super interesting topic, and it's a great question. We as a business have been looking at facial recognition, and I think it's the way forward. I think the whole biometrics, voice payments, this is the 21st century opportunity. All you have to do is make sure that there are sort of 3 lines of defense. Whilst you need to ensure that people can pay in the quickest and most efficient way possible, these new systems need to be tried and tested, and we need to try and break them to ensure that we don't expose a business using these new technologies. But for one, my personal view is that this is the future of online payments, and I think that the fact that people aren't using cash at the moment, I think this is speeding up the cashless society. I think that people now are being forced to use online commerce to manage their day-to-day lives, whether it's to order food, online learning, to even keep fit. Right, we've seen a massive spike in these industries. This is where I see the future, and it will be interesting to see where commerce recovers, and whether we just see that heightened demand on online commerce carry us through into the coming years.
So I have gotten back from each of the panelists there. We are over time now, but thank you all. I think it was great. I think we're learning that on these webinars the timing is quite tight. But at least we did get a contribution from everyone. But I think we live and learn. But thank you all. Thank you, Paul. Thank you, Pedro, for starting us off. Thank you, Anna. Thank you, Kevin. And please stay on for the next panel. And finally, but certainly not least, thank you, Diederik. That was a real great insight into what's going on in Europe, and we always great insights from you. So thank you all panelists, and Kevin.
Thank you very much.
Thank you, everyone. Thank you, Kevin.
Thank you very much. Have a nice day. Thank you.
And yeah, if I could invite Maria to join us now from DNB alongside Kevin. Are you there? So we can kick off with Kevin while we're waiting. And this next session is more to do with what's happening in the whole sort of startup community, in the funding space. And I can see that Maria has joined us now. So Maria is very much in the startup accelerator space within DNB in Norway, whilst Kevin has been involved in a number of startups, including when I first met him in Money Supermarket many years ago, and has been involved in many successful startups, and is starting a new company up in the middle of our COVID environment at the moment, which I'm sure is a massive challenge. Kevin, as you heard, has already introduced himself, but perhaps Maria, you could just do a brief intro to yourself, please.
Yes, can you hear me?
We can hear you beautifully, yes, thank you.
Yes, so I'm Maria. I work in DNB in a team called Strategic Partnerships. So we focus on mostly digital business development and partnership within several verticals. And I work towards the startup ecosystem. We have a FinTech vertical. We work with other banks, big techs, and so on. So I am in charge of the DNB Next Accelerator, which started in March. So it was quite interesting time. So I can share some.
Do you want to just kick off with, on how that has been? How are you running an accelerator? I mean, you said 1 week into the crisis was your launch day.
Yes, it was quite dramatic, but working with our partner, an incubator and accelerator here in Norway, they are obviously very agile and creative, so we managed to switch to digital quite fast, and we have had a very good program, both the professional part of it and the business side of it, but also on the social part. So I'm planning an after work tonight, and you just have to be more creative to get people out of the comfort zone. Yes, it's scary that it's going to be a little bit awkward, but it usually plays out very well. So you have to use a lot of humor and be creative to make people create relationships online, because that's the challenge. We're very productive when it comes to the business part, but the social part is a challenging one.
Yeah, as it is on these webinars, I was chatting to Nick yesterday about this, that trying to work out how you get a coffee break to work where you could actually get some interaction is much more difficult in practice. You're never going to get that bumping into someone in the coffee queue scenario where you can just get the opportunist question that you can ask. But I know Marta and Lily are working on ways around that, and we're going to have a great coffee break today with some polls going through. Kevin, you've been through a number of financial crises in the world from when you were at the beginning at Money Supermarket, but this is a very different one, and you're in the middle of your own startup regime with Raisin. You want to talk a little bit about the challenges and generally maybe the challenges in financing in this environment?
I'm worried with those comments, Robert. You're giving my age away, but yeah, I mean, if nothing else, kind of living through these various events, hopefully, builds up the experience. I mean, from a kind of Raisin point of view, we actually launched summer 18. So we'd spent 12, 18 months building up a robust UK business. And I'd always planned kind of 2020 to start kind of building up our awareness of a brand, both in trade and in the consumer space. But obviously, recent events have slightly kind of changed some of that. Not necessarily in the negative, but I think the way that we've had to adapt as a business, particularly around the kind of messaging and language that we're using for the consumer audience. But as I say, we built up a robust business, and as part of that, one of the key elements is the onboarding of new banks. So clearly a bank isn't going to operate within a marketplace like Raisin without going through some due diligence. But across the group, European-wide, we've worked with over 90 banks now. So we'd like to think that we've pretty much got answers to the questions. So we developed an onboarding Bible and are just about to launch a bank, which literally has been 4 or 5 weeks from initial engagement. So that capability is standing us in good stead. And we talked earlier about the current crisis from a banking point of view. A lot of the smaller challenger banks are keen to maintain the liquidity position. And while some have already got an established route to market, I think what we're demonstrating is there's challenges to those established channels. And we're giving a kind of diversification play for those established banks, but also for some of the newer ones, they don't even have a capability. So that kind of collaborative approach where we think that we are clearly understanding the challenges of banking partners is obviously standing us in good stead. And ironically, over the last 2 or 3 days, we've actually had the best business days we've had for many weeks. So I think through this, your ability to recognize the situation and adapt accordingly obviously stands you in good stead.
That's really, I mean, that sort of follows on from what Anna was saying about the bank fintech collaborations, that she feels that this crisis is going to push out more. It will accelerate the join between those competitors in some ways pre-COVID, but now working together to see what solutions can come out. Maria, in your accelerator, what sort of businesses are in there, and are there some collaborations you as a banker are able to work with them?
I'm happy you asked that question. I'm very eager to tell you. And so the accelerator is a program where we have 2 interests. So we have a high focus on corporate responsibility and boost the startup ecosystem and getting more companies in Norway. That's one part of it. We also want to be a relevant bank for startups. We're a big bank, but we're not only for the big ones. And the other part is on the business development and innovation side, where we look for partnership, and it's our way of exploring partnership with startups in a very professional way. So it's a win-win. They can get a lot of mentoring and help. Some cases they get investment, but we also get to learn a lot from them. And this year we've seen not only fintech companies, but other very high-tech companies within cybersecurity. And that is, we didn't know in February when we picked them that cybersecurity would be crucial for us during this crisis. We see increased fraud and other kind of issues within the space. So it's so important that we keep up the innovation, that we accelerate innovation right now, just like Kevin and Anna said. Not only is bank part of the solution, fintechs are, but also other kinds of startups. So increased automation and really making the most out of this crisis to digitize all areas. And we have also another company, a fintech, work with climate risk within the supply chain finance area. And I'm really eager to see the green shift really taking off during this crisis, that we can manage to get that change really faster now. And then we have some other AI companies working with data science and smart contracts. So very diverse crowd.
Wow. We have had a question in, and I think I mean, I don't know which of you would like to answer it, but it's about digital signatures and digital onboarding. So it's kind of following on from the conversation that we had on the earlier talk, and they're saying it definitely helps to speed up and optimize the processes, but the actual challenges in the European market seem to be given by the local regulators. Is there a discussion at EU level to align the use of digital solutions and facilitate customer life? So, I mean, I think this is from Giuseppe Dell'Ala. So, Kevin, have you got any thoughts on should we be pushing more towards digital solutions? Do the regulators need to give more leeway?
Yeah, and I think as per the previous panel, the kind of use of biometrics to kind of speed up the process. What is interesting as a kind of European operation across the jurisdictions that we work, considering there's supposedly a central set of regulatory guidelines, the interpretation and the adoption of those varies considerably. And even in the UK, we know that different banks also kind of treat them differently as well. So I think one of the questions earlier was about how the regulators are able to keep up with current events. I mean, unfortunately, I think for the regulators, the speed of industry change, even prior to the event, always presents challenges, whether it was the kind of use of mobile, whether it's kind of social media advertising, etc. So I think this is, as we come through the process, there needs to be clear collaboration, and that's not just industry, partnerships, but also from a regulatory point of view. So it's definitely the right way forward. It's obviously just the speed of change that is needed to kind of support the way things are developing. And let's not forget the way that consumer behavior is also developing.
And can you just sort of update and talk a little bit about the difficulties in raising monies at this time? Because I think there is a real question about fundraising. How do companies come in and do due diligence? Have you seen a shriveling up of some of the funds available to start up?
Yeah, I think if we take it a kind of more holistic view on this, I mean, clearly the UK has played a lead in terms of FinTechs, and this isn't just kind of London. In Manchester, where we're operating, there's a healthy number of kind of early stage tech businesses. And as you talk to those businesses, there's some great ideas. I think the challenge is how they bring it to life. So it's either through funding, and that means they're getting the right funding from the right source at the right time, or also through collaboration. But I think that's the biggest challenge. And very often, these businesses are looking to kind of join some sort of hub or network. And as we've just been hearing, I think those kind of incubator type setups are very, very critical. And that's a normal course of action. I think in the current environment, it really is a challenge. Some of the traditional investors, particularly at entry-level money, are spending all of their time helping their existing portfolio to kind of get through the current crisis, and to a degree there's clear firefighting. But I think there are one or two examples of businesses that really can accelerate and meet the current demands. And I think if they can come through with the right proposition and demonstrate that they can still develop reasonable kind of returns and growth in the current situation, then I think there are some opportunities. But as you say, the kind of traditional due diligence is a difficult one, because it's not just about the idea or the business plan, it's also about the people. And very often investors invest in the individuals as much as anything else. So it's definitely a challenge. And I would imagine there's lots of small businesses that, are kind of navel gazing at the moment, thinking, how do I, kind of get to the next stage? And I think support around that is as critical now as it's ever been.
And on your own business, on Raisin, have you found this lockdown? I mean, you said the last few days have been really great for business. What have been the upsides of the lockdown, and what have been the difficulties?
So I think from a general point of view, and so the kind of ecosystem that we've developed, so ultimately it's about helping the consumer, the saver. We've got service banks that work with us. We've got deposit taking entities, banks, building societies, and then we've got third-party distributors. And what we're getting now is more distributors that are keen to develop a cash proposition. So I suppose we're having to be a bit more kind of robust in terms of our selection process, so that we don't kind of flood ourselves and are unable to kind of execute on some of these. But also from a banking point of view, our nervousness once the government funding package was announced, and obviously the Bank of England reduced its base rate to an all-time low, is that would turn off all of the elements I've just kind of outlined to you. But it's been completely different, I think, from a consumer point of view. They realise that there are better deals to be had. I'm guessing in some respects people have got a bit more time on their hands, so they can kind of research the market. But also from the bank's point of view, and particularly some of the smaller challengers, they just need to build up liquidity, and they see the likes of Raisin as being a kind of, an easier way of building that up and accessing the markets. Because as I say, we've created a situation that gives us kind of 4-6 week onboarding process. So all of those things coming together actually work well for us. And what we have been able to do is also adapt our messaging. So we're very mindful through our own research that kind of financial aspects of your everyday lives can be very stressful. So where we can, we're developing messages that have an understanding of that and apply the kind of empathy. And as I say, to date, it's standing us in good stead.
Great. We've had a question in for Maria on you were talking about cybersecurity, and that struck a note with Kyriakos, who's asked about in cyber liability insurance. Is there time for a closer collaboration between FinTech and the insurance industry here at this time? Is Maria, do you see that question in the questions tab?
Yes. I actually don't know. We chose to separate our insurance company. So we started a merger with another bank. So we're now just a distributor. So all the product development goes on there. I haven't heard of specifically a FinTech collaboration, but I do know that they are working on partnership with other startups within areas that were interesting before this crisis. So I'm not sure. I could comment just on the startup situation in Norway, perhaps. And now,
please.
Yeah. So
sorry.
In Norway, we've had a lot of focus on innovation and startups the last 10 years, and really building up a generation of founders to have something to live off when we don't have the oil anymore. So we are kind of a special country in that way. And we learned so much from this crisis in 2008. And since we're quite a small country, not geographically, but when it comes to population, we have a very coordinated voice within the startup ecosystem, and they have had very clear recommendation towards the governments So like a list of demands, 10 bullet points, and they were so quick on listing those initiatives that they thought would give the most impact to really not lose this generation of founders that we built up. And they got maybe half of those things that they recommended. We've seen either rolled out or are in.
I know we're close on time, but maybe just give a couple of examples of the 10 points. What were the 2 top ones, perhaps?
Yeah, so you can stimulate it for companies in different phases. So we've seen increased funding for growth loans for more companies who are in the more commercial stage, but also in the early stages. So more innovation kind of loans. Yeah.
Okay. I can see Nick coming on to pick the baton off me to take us on to the second half of this event. So thank you very much, Kevin. I think there were some great insights, both from your long history in innovation in this industry. I'm not going to give away your age, but we're similar. I just got less hair. And Maria, thank you. I think it's been really good understanding what the Norwegian approach to this has been, and I think we got some great insights. So thank you both very much. And I'll hand over to Nick, who's going to take us from the break to the end. Off you go, Nick.
Thanks, Robert. Cracking job. Thanks, Maria. Bye-bye.
Well done, everyone. I thought that was a great panel. So thank you to both panelists, and thank you, Robert, for your excellent chairing. That was really insightful. We're now going into the coffee break and some polls. So you've got 3 minutes to answer the first poll, which will appear on the right-hand side of your screen in the tab. So this is the point at which you can grab a coffee, grab a tea, whatever is your beverage of choice. Grab a toilet break if you need. We will be going into the session with Massimo in just under 15 minutes time, but please do answer the poll on the right-hand side of your screen. You can find it next to the chat and questions tab. We'll be having 5 questions.
This music.
Somebody is DJing in the background.
I think someone is DJing for us here, Nick.
Yeah.
I don't know about you, but I thought we had some great panelists in that first half. I thought particularly impressed by the answers we were getting.
Yeah, I mean, I thought it was particularly just reflecting on the last panel, the accelerator and the fact that actually bank fintech collaboration is kind of actually been driven by this crisis I thought was a fascinating insight.
Yeah, and equally, I mean, Kevin, going back to those money supermarket days in the beginning of the 2000s, he's been through a lot of different crises in his career, and he's seen some great successes. And this is just yet another challenge to starting a startup 1 week into the financial crisis to do the launch is phenomenal. But he's seeing growth, and these things don't stop people that have got that momentum and that entrepreneurship to just keep pushing forward.
Yeah, absolutely. And I think the crisis really focuses people's minds on what's important and what isn't. And as Maria talked about, say for example, cybersecurity. When they selected the companies from the accelerator, they didn't know that it was going to be so important. But actually, with everybody being online and with taking fraud, actually cybersecurity is going to come to the fore.
Yeah, and as the first poll's only got 30 seconds left, but as Kyriakos was saying, I think it's not just cybersecurity, it's the insurance behind that will oil the wheels to make everything work. we see that in these times the criminals aren't on the streets because there are no cars to steal and go into the shop with. So they're reverting to hacking in and trying to break down systems that way. So 3 seconds to put your votes in, and the
1 second.
Just finished. And wow, we got the next poll come up now, so everyone go and have a look at that. Who will drive innovation in payments in the next 6 months? That was interesting, because if you remember, Nick, we had the big banks at the beginning in the first session that were on there. The obviously Central Bank of Finland, but we also had DNB represented there. And I think
I mean, Christian from DNB was very sorry from Danske. Christian from Danske was very much saying, like, you know, that the crisis was reinforcing their position.
Exactly.
And I think Christian from DNB kind of agreed with that point of view, that actually banks were now being seen as like part of the solution, right? Whereas in the previous financial crisis they were kind of seen as part of the problem.
They were the pariahs in the previous one, and they could be in the saviour group this time, which isn't a bad thing.
No, I mean the importance, and I think we're going to be picking that up in the one of the panels we're having after the coffee break, is also, you know, the importance of trust there. Whether you're a bank or whether you're a fintech, actually to be trusted in this situation is kind of crucially important.
Yeah, and how quickly the DNB got into that space to turn that solution around in 3 weeks to get payments out to those businesses that needed it most to cover their rentals. I think that collaboration between HMR, where they're the sort of revenue, the government, and the commercial banks out there, to get solutions where their tech teams were working 24/7 to get them through, was great.
Yeah, I think speed of response really here has been vital, and also, you know, I think I got a real sense from the DNB example that actually countries that have responded to this well are ones where, you know, the bank and regulatory and authorities kind of collaboration has kind of, you know, everybody's kind of stepped up and worked in the same direction.
And it's interesting, in the current survey, central banks for Alexei hasn't got a single vote in the who's going to drive innovation.
I feel like I should go on the poll and just like vote for central banks.
Someone needs to vote for Bank of Finland.
We've got just under now 20 seconds left for this poll. I'm fascinated to see the results of this, whether you know, fintechs and major banks are kind of vying at this point in time.
Yeah, I think it's interesting that the major banks, if this had been in the previous financial crisis, they'd have got 0%. They're getting a third of the vote here, but fintechs still are seen as the major innovators after the second one's finished.
Yeah.
So
okay, we're on to the third poll now.
10-minute instrumental upbeat music is, but there we go. This is Christmas tree music. Wow.
So the third poll's about cash usage, and I think that was interesting to you know, that was touched on in the couple of the panels, wasn't it? That in lots of spaces, you know, and countries, cash withdrawals had spiked up at the start, but then cash usage, as Diederik had actually talked about in it when he was on stage, suddenly cash usage has dropped away dramatically, and a really big shift to digital payments. So, you know, I think the poll question here is really about, is this move to digital payments, is that going to accelerate the shift to a cashless society? And when do you think that might become a reality? 2 years, 5 years, 10 years, 20 years, or 30 years? And already, if you can see the stats on the right, Robert, we're seeing some actually real spread here in responses. I mean, obviously, you know, the longer term is still in leading, but there's a real spread. Some people think, you know, 2, 5, 10 years, it's, you know, it could be closer in.
2 years, I think, in this survey, because again, 2 years is very short. But I mean, if you're in the Nordics, you could probably see the 2 years coming through.
Yeah.
If you were in Italy, Greece, Spain, you may not have the same view.
Yeah, but the responses are amazingly balanced here between from the 2 to the 20. And as you said, Robert, obviously it does differ a lot by market. I'm quite surprised that the near term actually is showing so strongly in these responses.
I think it's going to be it's a neck and neck between 5 years and 20 years at the moment, which is great. And what did you think about the sort of the insurance viewpoint? So Pedro was talking about how we lost
the DJ music.
Okay, well, that's not a bad thing. My favourite music, it has to be said. Does that mean we're coming towards the end of the break? No, we've still got a few minutes left.
We've still got a few minutes.
So I was just saying the sort of insurance still in the dark ages, Pedro was saying, still so much paper and wet ink needed. This, he feels, could be, forget the drive to a cashless society. This could be a drive towards driving paper out of an industry that is very, very paper-centric at the moment.
Yeah, I think there's a huge opportunity there, to be honest, to see that, to actually really digitize the insurance world. As we've seen, payments has been kind of at the forefront of this digitization. Banking, sort of retail banking with now digital banking is sort of, the next wave. And then there's still a huge opportunity for insurance and just, disruption, innovation, digitization in the insurance space. I mean, being able to actually, get a policy without having, any paper or wet signature would be a massive transformation. But that's exactly as we saw in the banking space, where digital onboarding was one of the first kind of spaces that was really kind of attacked by the FinTechs and has now become kind of the norm in a lot of markets.
Yeah, no, I think that's interesting. I can see we've got the final survey up there now, well, the fourth survey, sorry, out of 5, which is about working from home, and that has been a major change. I've seen a lot of people I know in the industry who said they would never have worked from home. It was something they would never want to do. But this social experiment that's forced people to work from home, people are actually seeing it does have benefits. There are some really not just the cost saving of the lack of office space needed because you can work from home, but equally the fact that the individuals that are working from home are no less productive. I think the fear always was people work from home, they're not going to be as productive. But I think people have actually seen that working from home creates a stronger productivity. People are not having to spend so much money on transport, spend so much time on transport getting in and out. So they've got more time to actually focus on their work. And has it damaged the business in the way that people thought it might have done? I think many businesses are actually doing very well out of working from home.
Yeah, I mean, I was speaking the other week to a CEO of a private bank in the UK, and they'd kind of almost exclusively worked in the office prior to the financial crisis. Now they've had to 100% switch to remote working, and it's working really well for them. Obviously, some of those employees are very keen to come back into the office, post-crisis, but equally a number of them, are actually finding that for them it's working better working remotely and having a mix of that ability to be in the office when you need, but then also work from home or work remotely, when you're when you want that flexibility, is actually a powerful thing. And I think it's for that bank, it's changed some attitudes about working from home, and actually produced benefits in efficiency that they were unexpected for them.
Yeah, and it's interesting to see the result of that poll was 50% voted that, 42% voted 50% of businesses would actually look at maybe one day a week at least working from home for their staff. That's quite a surprise in reality. I'm sure before this crisis, it would have been 5% or less people who would have said that. So in fact, we had 20% of the voters thought 75% would do that. So I think there has been a real sea change in this. On the last one, I'm not sure where Marta came up with by putting this last one up there, but
did you enjoy it so far? Yes, no, or so.
I'm glad no one said no yet. Thank God for that. it's a bit too close up, this camera, for me, I have to say. Yeah, I think we got an 87% enjoyment rate on that, and so let's hope you keep that up for the second half, Nick.
Thank you very much. Thank you. And please keep, to everybody who's online and attending this this webinar, please keep the questions coming through the questions tab and chatting through the chat. As Robert was doing very effectively in the first half, I'll be monitoring the questions and chat through the discussions, and we'll try and ensure that all your questions are put to the speakers and panelists.
So I'm going to log off now and pass over to you, Nick. Off you go.
Lovely. Thank you very much, Robert, and welcome everyone to the second half of this webinar. We're going to start off the second half with a keynote from Massimo, and welcome on stage, Massimo. Massimo is a UN global expert on blockchain, cryptocurrencies, and FinTechs. So I'm very excited to hear Massimo speak. I've heard Massimo. I've heard you speak before, and it's always been really insightful and inspiring. So we've got a strict 20-minute timing in this webinar, so I won't take away from your timing. But I'm really looking forward to your presentation. So over to you, Massimo.
Thank you very much. What I'm going to talk about is blockchain solutions to address challenges caused by COVID-19. And this issue is very important, and the presentation is a bit long, so I'm going to squeeze to the basic points. First of all, we have to understand what this COVID-19 pandemic is causing, because the behavior of governments has been very interesting in a sense that we've seen, first of all, governments, officers, and even the general population not to feel that at the beginning of the pandemic that the pandemic was coming. People were thinking that it was a Chinese thing. But then, in fact, China was even reluctant to share information with the international health community. And then things changed dramatically, as we've seen it. And one important thing is that official statistics are not reliable. We don't really know how many people are infected and how many people actually died because of COVID-19. But we do know that there has been a severe impact on all the economic variables, a drop in real GDP, total sales, industrial production. They all have been affected by pandemic. But we're going to see in a minute that this is a very important issue also for the financial industry. Now, the issue right now is the second wave, because everybody is talking about lifting the lockdown, but the problem is if you look at the pandemics that took place in the past, for instance, the Spanish flu, we're going to talk about that in a minute. The first wave was bad, but the second wave was far worse, 5-6 times worse. So I mean, we have to be very careful in this period and not to lift these lockdown measures all at once. Now, which are the main variables that we have to take into consideration for that? First of all, the number of the asymptomatic cases, the quarantine, the testing for COVID-19, and the vaccine. Now, one interesting thing is that a statement that was made by a British doctor that said that countries should be really careful not to lift these physical distancing measures all at once, because that could cause a terrible second wave. In fact, we're going to go through these main variables, and the first most important thing is that the asymptomatic cases, they all they are most of the cases. Most of the people, 80% of the people, have mild or asymptomatic diseases, while only 14% have severe diseases, 6% are critically ill. So that basically means that there is no way we can control the pandemic if we don't look at not only the symptomatic but the asymptomatic people, because these people are going to go out in the streets when the pandemic, when the first phase is over, and that is going to cause serious problems. Of course, we have to take into consideration some blockchain apps that can help us monitor the circulation of these asymptomatic people. Now, about the self-isolation and mandated quarantine, there are many issues that we can address, but the most important thing is the effectiveness of these social distancing measures. Why? Because this depends basically on whether the infected individuals will self-isolate, because if they don't, that's going to be a serious problem for us. How quickly these symptomatic individuals will take to isolate themselves, and also if people will be looking for medical advice by remote, because otherwise if they go to the hospital, they infect everybody. So of course, for all these steps, all these variables, the use of blockchain apps should help us monitor these processes. Now, another very important issue is the testing for COVID-19. But basically, three main variables would help us overcome this terrible pandemic. First of all, widespread testing, which has not taken place in the countries affected. Second, contact tracing. But first of all, population behavioral changes. Because if people stay at home or they behave with social distancing measures, that is not gonna increase the risk of the widespread of COVID-19. In fact, there have been two different approaches: total lockdown and less disruptive social and economic measures. And in fact, if we take this second case, we can see that that has been very successful in Hong Kong and in Taiwan. In Hong Kong, for instance, the number that everybody's looking at, the R0, so the average number of people, each individual with the virus is likely to infect, is being kept at below 1 or approximately 1, even not taking a total lockdown. So total lockdown is never very successful if what is mostly successful is the population behavioral changes. Of course, all these things must be checked with the blockchain apps. The ideal solution is vaccine, but this is not gonna happen soon. Two main variables are at stake here: the location, because the right location for the vaccine is where there is an ongoing transmission of the disease. The second thing is who's gonna manufacture the vaccine, because there are many companies that are developing vaccine candidates, but they should cooperate among themselves. Again, blockchain apps could help us an exchange of information between medical centers and vaccine manufacturers about these vaccine developments. And this is an issue that I wanted to talk about. A very interesting study that was made in the United States about the flu Spanish pandemic that took place between January 1918 and December 1920. So 1920 is about 3 years, basically, 3 full years. And we see that what happened there is that the cities that implemented early and extensive non-pharmaceutical interventions, which means social distancing measures, suffered no adverse economic impact over the medium term, and they perform much better in economic terms than cities that had early lifting of lockdown measures, much better performance. So generally speaking, the first cities experienced a relative increase in the real economic activity after the pandemic. They didn't really suffer so severely for the pandemic, while the second cities, the cities that had early lifting of lockdown, suffered a lot. So we had two negative impacts, an economic impact and also a health impact, because there were far many deaths in the second category of cities. So we have to be careful about lifting of the lockdown measures. Now, let's look at what blockchain solutions can be used to address this COVID-19 outbreak. There are basically 4 ones that we can measure, and we're going to go through them. Tracking medical material, supply chain tracking, basically, and, or donation tracking. Also, managing medical data, contact tracing, and there's a big issue about contact tracing in Europe, in the United States. So we're going to see different kinds of contact tracing. And then also insurance claims processing. This is a very interesting issue for the financial industry, because there has been, and we're going to talk about, an explosion of a Chinese company in insurance claims processing, from nearly 0 to 100 million clients. And this is the future for insurtech in Europe as well. So we talked about different blockchain sectors, but there is one blockchain solution, a company called the Medlock, that is addressing all different blockchain problems at the same time. It's not a real blockchain, but it's a blockchain ecosystem. Medlock is a joint collaboration between Dubai-based Avantas Technology Accelerator and Maxon Rowe, and it is focused on monitoring, control, and communication of the COVID-19. So there are 3 phases, as we know, of the pandemic, and Medlock helps in all of them. The first phase is the response phase, which is basically supply chain tracking the supply chain for medical drugs, foods, and critical supplies. Also, coordinating welfare activities, tracking donations, that has been a big issue in several countries like China. And also managing medical data. That is a very important issue as well. Then we have the recovery phase, and again, Medlock is addressing this issue, because it gives it issues an e-certificate for the citizens about their COVID-19 status, or whether they are infected or not, if they request it, of course, because there is a huge issue of privacy on that. Then there is a collecting data to enforce smart lockdown strategies, because lockdowns are not all the same, and we have to be careful about the strategies to be followed. And the third phase is the preparation for the next wave of COVID-19, the one that several countries are addressing now. And Medlock helps in helping law enforcement and border control authorities when the people cross the borders, because you would know that the person that is crossing the border is infected, advising media citizens with authentic information, the issue of fake news, and improving insurance claim processing. Again, Medlock, as we said, its features is to minimize administrative costs through automation, provides AI-based analytics and smart contracts to facilitate coordination mechanisms for welfare, because the welfare measures can be adopted, for instance, for the financial industry in a different way, but they have to be coordinated for the people that have to address these issues. Then there are some other apps that are interesting. For instance, BCA ID, which is an app for governments of Blockchain Army, a Turkish blockchain. That basically works in a way that you download the app, and then you fill in a questionnaire, and if you have some health conditions close to those of coronavirus affected patients, you will be spotted. And if you need, you can make an appointment and an appointment to be tested. There is a similar company. There is a company that does a similar app, a Canadian company called Vital Hub Corporation, and the app is called Doc IT, that helps screen the residents for common COVID-19 symptoms. Now, supply chain tracking is very important, and that has taken place a lot in China. For instance, Alipay has launched a blockchain-based platform that tracks the demand and supply chain for medical supplies, because during the pandemic there is a huge confusion where we get the medical stuff supply, and coordination is essential, and blockchain helps on that. In the United States, there is another company called Remedy that has created a blockchain company to implement a company that does to implement a program that does exactly the same supply chain monitoring for large inventories. Now, donation tracking is a huge issue in China because the China Red Cross has a questionable reputation. There were many scandals about the management of donations. And also for the Sichuan earthquake in China, and then there was Red Cross Society of Hubei, which stated it's deeply distressed for the management of donations. So there has been a blockchain startup that created an app called the Shanzong, and that tracks exactly what kind of donations are given, how they have been matched to areas, so you would know where the money goes or the medical stuff goes, exactly where it's delivered. That is beautiful, and so that the donation can go directly to the people that need. There is also a managing medical data blockchain that was done in Xi'an, a northwest China province. And then let's come to contact tracing, GDPR rules. About contact tracing, we have to say that there are different rules everywhere in the world. We're going to focus on Europe. If somebody wants more information, can read the presentation. Basically, European apps must be compliant with EU GDPR. And UK has got a NHS app that remains, of course, subject to European GDPR rules until the end of the year, when the Brexit is finally over. And I wanted to go, these are the rules, because the rule of consent is essential for the implementation of these contact tracing rules. But I wanted to go to this issue, which is insurance claim processing. I spoke at the beginning. Blockchain technology, of course, mitigates the risk of infection from face-to-face contact, and because processes everything online. And this mutual aid insurance platform is an issue that very important in China, because they surged a lot during this COVID crisis, and these are largely unregulated, P2P platforms, largely unregulated, but they've been very successful. The best one is Xiang Hubao, which is from 1 month to another, I believe, got 100 million clients, and they have no upfront payments, no admission fees, and processes coronavirus claims. They charge about, I think, $10 a month, and if you multiply by 100 million is a billion a month. And so they are able to pay the huge cost of coronavirus claims all at once. And that's the reason why it's been very successful. I believe this is the future for InsurTech, and it should take place. The essential thing is Xiang Hu Bao means mutual protection. This mutual nature has been the reason why they don't charge a lot. And they have a widespread acceptance by customers. The only problem is, as we said, that they are not licensed by the China Banking and Insurance Regulatory Commission, and so therefore they don't need to follow the tough capital requirements like a traditional insurer. So I think I was a bit quick, but I think I addressed all the points, and that's it.
Massimo, that was fantastically insightful. Thank you very much. I had no idea that there was so much blockchain-based innovation going on in response to the crisis. And I'm conscious we're at time, but before we start the next panel, I just wanted to ask you one question, because you spoke about contract tracing in it, and in a lot of European countries, there's quite a lot of debate going on about a centralized and decentralized model.
Exactly.
I wonder if you could just give us your view on maybe the advantages of using a blockchain model for contract tracing versus a centralized model, which some governments are arguing for.
Well, I would say two things about that. First of all, I've been looking even in some technicalities of centralized versus decentralized models. Basically, centralized model is to the extreme the model that is being used by Singapore. And Singapore, this is very interesting. Singapore was named as the most successful model to be implemented as contact tracing. But at the beginning of April, Singapore had 1,000 infected people. At the end of April, it has 10,000. So contact tracing is not the solution. That's what I want to say. Contact tracing is an instrument, but people's behavior is the solution. If everybody follows the rules, then contact tracing will be successful. Otherwise, it won't. Now, the decentralized model is the one that is being used by Apple and Google, and that model basically makes you anonymous. If you are infected, you're never gonna know. Nobody's gonna know that you are infected, but there will be a message sent to the people that you are gonna be in touch with to say that these people might be infected. The centralized model works this way. In Singapore, for instance, if you are infected, you get a message from the Ministry of Health saying you are infected. You have to go to the to do a test. So there is a sort of force enforcement of these measures, and you cannot skip it. You know, this is the basic issue. And now in Europe, they are using this PEP-PT, which is a sort of hybrid model. It's not centralized or decentralized.
Very interesting. So that's a really insightful answer, because the change in consumer behavior will leads us naturally into the next panel. Thank you very much, Massimo. I really appreciate it. I'll give you my own round of applause for that one.
Thanks.
Thank you very much. So so this is a perfect link onto the next panel, where we're going to in particular be focusing on consumers' needs and behaviors at this point in the crisis. So can I please invite the panelists up on the stage again? So we've got Christian and Alexei joining us again for this panel, together with Amit from DBS, Marius from TransferGo, and Rene from the European Commission. I can see some of the panelists joining. Great. So for those who haven't joined us already, would you like to introduce yourselves? Maybe Amit, you would like to go first. Sorry, I think we've got some issues with your audio. We can't. I'm having trouble hearing you. You might want to log out and rejoin again onto the stage. Thanks. In that case, can we go to maybe to Marius?
Hey, can you hear me?
Yeah,
all right,
perfect.
Good. Hi, everybody. Nice to meet you. I'm Marius, Director of Brand Marketing and Market Expansion at TransferGo. We are a money transfer company, mainly focusing on remittance. So yeah, tough times for everybody, but happy to be here and talk about it.
Great, very welcome. And Rene.
Good morning, can you hear me?
Perfect.
Well, I'm working for the European Commission in DG competition, and I'm dealing with antitrust issues in the financial sector and would like to contribute these elements to the discussion today.
Excellent, excellent. So we're looking forward to that. And Amit, do we want to try again with your audio? I think we lost Amit, unfortunately. We'll come back to him. So let's get the discussion going then. So I think Massimo teed this up very well by talking about the importance of customers and customer behavior. So I'm curious to learn what people are seeing in terms of what customers need at this point in the crisis, and how organizations are already trying to meet those needs. So maybe Christian, you just started off. I mean, how is your business responding to customer needs, and what do customers tell you at the moment?
At the moment, I think it's certainty people are looking for. You know, they knowing what their situation is, how they're going to move forward from now, and obviously the challenge we've had, like many other banks and financial institutions, is that and react based on that. And it's been a bit of a drip fed from the government, where they come up with some financial initiatives, and then they've been refined as we go. So we're constantly learning and constantly have to react. But it's just the nature of it. They don't know what they don't know, so they take the feedback, they improve, and then we have to do the same. So I think we're really getting a lot better at being there for our customers, and it's become a lot more personal. We have a lot of internal stories in the bank, so we can kind of keep track of what everybody's doing. And there's good stories about some of our colleagues that have been working at 9 o'clock at night because it suited the customers, and it just suited them as well, because they both have small kids that had to go to bed first. That's kind of the situations that we haven't had normally, because it's pretty much 9 to 5, and you kind of try and fit everything into that.
Yeah, absolutely, absolutely. Alexei, is that similar to what you see from banks in Finland, and how they're responding?
Yeah, I think so. So definitely certainty is what they're looking for, as well as security, safety, familiarity, but also efficiency. So we need things to work really fast and efficiently, and able to rely that systems are working. And fortunately, what we're seeing is that they are working. So a lot of the banks have been engaged in digital transformation programs the last few years, and now some of those investments are clearly paying off in terms of customer satisfaction. Consumer behavior has changed quite drastically, not necessarily on a permanent basis, but the needs are a bit different right now, and there's a lot of growth in e-commerce, home deliveries, online services, and so on. So that infrastructure really needs to work flawlessly.
Absolutely. Has the shift also put pressure on your infrastructure, Marius? Is there changing in customer behaviors that you're seeing in your business?
Well, absolutely. We are an online business, so we always try to actually convert people from offline to online, transition them from cash behavior to digital. So for us, actually, we can see massive increases. We are aware that a lot of people lose jobs, so we don't know how long this will go like this. But for now, I think people are resilient. Of course, you know, we work with remittances, so for them, sending money back home is absolutely instrumental. So even if they send less, they have to send because families back home depend on them. And I can say there are like two sides on, you know, two takes on this. First, like in terms of what people expect, what customers expect. So first of all, I think they expect that we will stay alive as people, stay safe, and also as a business to stay alive, so we can respond on time, we can send the money on time, and be there for them. But in the same time, I think we need to stay alive as a business for our own employees, because our employees are somebody else's customers. And I think, you know, because there's like a big question, is it okay to do marketing during these times? I would say yes, absolutely, because we have to keep people employed. We have to keep going because this is how we power through in this kind of cases.
Very interesting. Very interesting. I'm going to try and go to Amit to see if, because I'm very keen to get your perspective from a different set of markets around what the customer